Hello and welcome to Asking for a Trend. I'm Josh Lipton. For the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving right into. Watching the key earnings movers after the bell. Broadcom shares jumping after the company posted better than expected results. We get analyst reaction straight ahead. Plus, it was a record day on Wall Street. The Dow and the S&P 500 closing at new all-time highs, while the sell-off in Oracle weighed on the NASDAQ. We've got the takeaways from the trading day. And it's been a wild week for the media industry, between the battle over Warner Brothers Discovery to Disney's investment in OpenAI. We're breaking it all down. Well, Broadcom posting fourth quarter results just moments ago. For more, we want to bring in here Angelo Zino, Senior Vice President and Equity Analyst at CFRA Research. Angelo, it is great to see you as always. So look at the results. Broadcom reports, Angelo, it looks like a strong revenue forecast. I see CEO Hock Tan here saying we see the momentum continuing in Q1 and expect AI semiconductor revenue to double year over year to $8.2 billion. The stock here, at least initially, Angelo, it's higher in after hours, which is impressive because it or even a rocket ship year to date, Angelo. You know, year to date it was up more than 70% heading into this print. We're up another 3% right now. What do you make of the results?
Yeah, so thanks for having me, Josh. And I'd say overall, I mean, this is as good as you could have gotten from, Broadcom here, especially given, to your point, all the momentum going into the print here this quarter. The fact that it's up alone, I think, is very telling. But you look at the results here, I mean, top line grew about 28%. We were looking for about 24%. The guidance also implies a top line growth of about 28%. We were looking about 22, 23%. So, great on that side of things. Even on the margin side, adjusted EBITDA about 68% was better than our 67% forecast, and fairly in line with that going into the January quarter. But maybe to the real important point here, it's all about the AI semiconductor revenue, and the AI semis are just it's doing phenomenal. Whether we're talking about their custom silicon exposure and what they're doing with Alphabet in their TPU business, or whether it be on the networking side, they're really kind of it's on all cylinders here. So growth of about 74% here for the October quarter, and I think you noted it's going to double here in the January quarter on a year-over-year basis, much stronger than anyone had anticipated. And as you look ahead here, that momentum we think continues at least over the next 4 to 6 quarters easily.
As you noted, Angelo, Broadcom does help customers design their own custom AI chips. How big is that opportunity potentially for Hock Tan? And he does kind of have competition there. So what does he bring to the table that's different?
Yeah, I mean, it's huge. They are the biggest, basically, co-developer of these custom silicon chips. And they do have the big one out there, and that is Alphabet's TPUs. Their TPUs are in their 7th edition at this point in time. They've had that business for about a decade. But you kind of look at the potential here. I mean, that business could potentially 5x here over the next 5 to 6 years. So there is significant upside potential. They are in an area, or they're positioned to really take some significant share in terms of the broader compute market over the next couple of years, especially when you compare them to a name like NVIDIA, right? Custom silicon will take some more share of that broader compute market, and clearly Broadcom is the leader there. They've got about 3 customers that have really ramped up here in recent memory, but there is going to be more on the horizon, and that's what we want to hear about on the call, is what it is the potentially new customers that they've signed, as well as additional pipeline that they have over the next couple of quarters in terms of ramping up, and potentially could further drive upside to that custom silicon business.
Angelo, I know you have a buy on the name. You're a believer. It has enjoyed this monster move, though, Angelo, but you would still argue to your clients, you tell them, hey, valuation's still attractive here?
Valuation's not attractive at this point, especially when you compare it relative to some of these other compute-oriented and chip maker type names. But it all depends on what you want if you're an investor out there, right? I mean, when we think about Broadcom, this is a company, again, they are going to take share, and they are a company that we have very little to almost no concern about here over the next, let's call it 2 to 3 years. Whereas there are, I'd say greater concerns outside and into other AI themes out there, right? They don't have that huge OpenAI exposure that could potentially, cause this thing to roll over. So this is a name where, when you combine it with their diversification strategy as well, I mean, VMware did absolutely phenomenal this quarter as well, growing about 19% year over year, and they've got those superior margins. We think the valuation is still reasonable enough where you can continue to buy the stock because the visibility and the growth trajectory remains so strong.
While I have you, Angelo, I want to switch gears because there was other tech news today. I'm just interested to get your take on OpenAI. They were making all kinds of news. The Disney partnership. They also unveiled ChatGPT 5.2 per Axios. Company positioning it as a major upgrade, best model yet for everyday professional use, they say. I'm actually curious, Angelo, just as an analyst who covers Alphabet, how you're sort of thinking through this competition now, this great rivalry. We got, OpenAI, ChatGPT, but we all have Google Gemini, and Google certainly brings a lot to the table. I mean, distribution, it's free. They've got 650 million users per month. How are you seeing that rivalry play out?
I mean, it's something that'll continue for years to come. I mean, we've been believers that there's not going to be one winner when it comes to these large language models or any part of the AI ecosystem for that matter. So the fact that you continue to have, OpenAI, in some respects, I mean, you've got these companies just leapfrogging each other as they roll out their next gen models. And that's a healthy thing. It's part of that AI evolution, and you need it. And hopefully you continue to get more use cases prop up from these large language models. So at the end of the day, listen, I think it's a good thing all around. And I never suspected that, Alphabet would, necessarily just be the only game in town here. So, and when you start thinking about that broader AI ecosystem, right, the Oracles or the NVIDIAs of the world and what have you, you do need OpenAI to some extent be successful here in the coming years. So our view is it's a good thing for OpenAI. It's a good thing for the AI ecosystem.
Angelo, finally, I just want to get your take on another big story today, and that was the move in Oracle. It got whacked in today's trade, Angelo. Explain that move for us. What do you make of it? And I know you have a hold on the name, but do you think to yourself after a drop like that, hey, maybe that's a smart entry point after a beating like that?
So not yet. I mean, the problem with Oracle is the story is just too messy at this point in time. And when it comes to investors, they just don't like messy stories, and they just don't like uncertainty. And there's just too much here to worry about, whether it be the financing needs, whether it be that OpenAI concentration, which is a big risk here, especially as you go into the second half of 2026 and into 2027, where those expectations for that OpenAI ramp really starts to increase. So, in our view, we've just said there are just better ways to play the AI story right now. Even if you want that OpenAI exposure, you're better off with it with a name like an AMD. And then you can, throw other cloud names within your portfolio, whether it be an Alphabet or a Microsoft for that matter, companies that are better financially positioned as we move towards an environment that's going to care more about execution. And that's really where investors are going to be, we think.
Angelo, always great to have you on the show, my friend. Thank you.
All right, thanks a lot, Josh.
Stick around. Much more Ask for a Trend. That's still to come. The Dow and the S&P 500 notched new records while tech stocks found themselves under pressure. For more on the trading day takeaways, let's get to Yahoo Finance's Jared Blickery. Jared.
Thank you. We got to talk about those records. In fact, today it was raining records, and some markets I haven't seen come alive in a long while are finally approaching and exceeding those record highs. So I'll start with the Dow. Now, we've been seeing a lot of records in the Dow, so that's not one of the come from behind stories. But here's the year-to-date chart, and just to show everybody, still up about 15% there. NASDAQ was down today. I'm going to talk about tech in a second, but S&P 500, definite record there. S&P 500 equal weight. So if you don't do the market cap version, you do the equal weighted version where every stock gets one vote. Guess what? That just started breaking to new highs. So a couple days in a row there that we've seen records Russell 2000, that would be the small caps. Several days in a row, we've seen that come alive. S&P 600, not quite there just yet, but it's close. S&P 400, I don't have it on here, but that is the mid cap. So you don't like the S&P 500, the S&P 600, S&P 400 is where we're seeing some records. And then the CRSP US Microcap Index, so the very smallest of the small, the penny stocks, also seeing a lot of action there. And let me just show you what has happened, though, over the last 10 trading days. So this dips into the end of November. And even though we haven't, tech was down today, we've seen it lead over this last 10 days. We've also seen a lot of record highs in the Philly Chip Index. And so arguably the AI trade has come roaring back, but we've also seen a lot of other participation. So you take a look at what happened Thursday. Here's our final look at the S&P 500 sectors. Materials up there, that's cyclical. Financials, that's value. Industrials is cyclical. Healthcare, staples, utilities, those are defensive. So a really broad swath of stuff is making highs right now, and that is a very healthy thing.
The Dow leading.
Yes.
What do we make of that?
Well, not just the Dow. So we got the Dow Transports and the Dow Industrials, and usually we mean the Dow Industrials, of course. But let me show you. I did a segment, it kind of broke this out, took 4 minutes. So if you want the expanded view, you can take a look at this on the Yahoo Finance site. But I was doing Dow theory, and that's where you have the Dow Transports and the Dow Industrials, and you want to see them confirming each other. And over the last 171 days, guess what? That brings you back to those April 8th lows. And what we have seen is the transports here just exceeded these highs from earlier in the year, and they have really broken to the upside. And so one of the famous sayings in trader technical analysis is the longer the base, the higher in space. So we got multiple month consolidation here, and not surprisingly, we're seeing a huge breakout by the transports. Now, another thing about the transports is that when you use them in conjunction with the industrials, when one of them starts doing something different, that is a huge heads up that we might be in a rollover situation or a trend changing situation. Here is the end of 2024. Now, in purple here, we got the Dow. This was a double top. We didn't know that at the time, but it ended up being a double top. Look at this. It was only able to go halfway. The transports just could not even match that or get over that 50% hump. And so they both broke to the downside. But arguably with the Dow theory system, you would have known something was potentially up at early in February, and I think we've finally rolled over later in the month. So you can definitely get a good heads up if you follow Dow theory.
You know what we haven't talked in a while? Metals.
Yes, and
little gold, little silver.
They have really perked up today. So metals are flexing. And it's not just gold, it's not just silver, palladium, you might say. Well, also copper. Copper has my eye, and that's really when things get heated up because that is a pure industrial metal. And so here's what happened on Thursday. Silver up 5%. Let me just show you the chart because it's pretty impressive when you take a look at the year to date. I mean, the intraday looks good here, but let's take a look at the year to date. And there we go. After a brief consolidation here, it has just rocketed higher over the last few weeks, 116%. So it's more than doubled in price. But I did mention copper. I want to make sure we get to that HG equals F. So it was up 2.5% on Thursday. Here is the year to date. Now this is a lot choppier, but you will see we're kind of trending up here. And I think, and this, by the way, is a Liberation Day slump. I think tariffs were either put on or rolled off, and that has a lot to do with the copper price right there. But tariff effects aside, we are pressing up against long-term highs. And so if we're able to rocket above, I think copper is probably going to do a gold. It's going to do a silver, and we're going to see the metals complex really explode here.
All right, thank you, buddy. Appreciate it. Coming up, we're taking a closer look at the state of the media landscape. Much more Ask for a Trend still to come. Disney is investing $1 billion into OpenAI and opening up its Star Wars, Marvel, and Pixar characters for AI-generated content on the company's Sora platform. The move raising big questions about content creation and where advertisers might need to follow going into the new year. For more, we're bringing in now MNTN CEO Mark Douglas. Mark, it is always good to see you. So let's start right there on that news, Mark. Disney and OpenAI. So Disney's going to allow OpenAI users to generate videos, Star Wars, Marvel, Pixar characters. I mean, I guess big picture, you saw those headlines, you read the story. What did you make of that news, that partnership, Mark? And what does it all mean, deals like this, from an ad tech perspective?
Well, I think it makes a lot of sense. The companies with this kind of IP, this intellectual property, they're still figuring out how to bring that in the world of AI. And Disney is basically saying they support consumers basically playing with the content and repopularizing it probably in the process. So I think it's not something Disney typically does, but obviously like they want to jump both feet in and putting money to behind it. So that's kind of unexpected also.
It's interesting, Mark, though. I mean, just big picture, if fans are now, users now, going to be creating all this content with these free Gen AI models, how does that shift? How does that change how advertisers think about creative, think about strategies? What do ads even look like in a world like that?
Well, I think you're going to see television ads take on more the form of social ads, which is more engaging, kind of more active, things that you wouldn't expect. And that's already happening. We released generative AI tools that we're having people come to at a rate of over 1,000 new users a week. But you're seeing that throughout the industry. I mean, everyone is jumping in. And so, the ads and the content the ads surround are going to start to get closer and closer. And on that point, with one interesting point, our customers increasingly are like, can I do Gen AI ads that reflect the content of the shows that they're against? So that's kind of where the trend is headed.
Another big story I need your take on, Mark, obviously, would be the ongoing drama, WBD, Netflix, Paramount, Skydance. How does this end, Mark?
Well, my opinion is that this is a nice to have for Netflix, but it's a must have for Skydance and Paramount, and it's a must have at a higher price point. They're taking it directly to investors, and I think they stand a pretty good shot. Money talks, as they say.
It does. Let me ask you, especially if you have Ellison money, if Paramount Skydance makes this happen with WBD, I'm just curious, what do you think sort of the ripple effects of the ad market would be?
I don't think it changes the ad market in the sense of like there's still the same amount of content, but I think it opens up a lot newer content over the long run. Hopefully, I was talking to someone and they said, hopefully we get a new ending for Game of Thrones because we get a new season of Game of Thrones. And so, that new content is going to attract more dollars. So I think it's overall healthy to have kind of a multiple really strong players in the industry. And that's what Skydance is trying to build.
And Mark, I want to get your thoughts on something else. We had a former CNN U.S. president, John Klein, on the show, and he was talking about YouTube's place in all of this. Take a listen to what he had to say.
Well, YouTube is a big winner because the biggest competition that Netflix and everyone else in the media industry faces is from YouTube, which has about twice the viewing time spent than Netflix does in any given month. And this deal, whoever ends up with this prize, so to speak, it is not in any stronger position vis-a-vis YouTube.
So Mark, one, just what do you make of those comments? And also just what does YouTube's dominance mean from an advertising perspective?
I think consumer time is not a zero-sum game. Consumers keep finding more hours to spend being entertained. So they're spending an hour a day on social media. They're spending 3 hours a day on TV. I watch TV every day. I use YouTube every day. But they're not the same videos. I don't go out to dinner and basically talk about the latest podcast I watch. I talk about the season opener Landman or the biggest shows. And I think television occupies that spot as the biggest moments in entertainment, and that's not going away. YouTube, there's time for them in the day to watch them also.
Where does all this, Mark, this conversation, where does it all leave the legacy distributors? Where does it leave Brian Roberts and the Comcast of the world?
It's a declining business, and they're consolidating to deal with that. But consumers are that. I don't think there's a person who's over the age of 30 who has ever bought cable, or under the age of 30, I should say, who's ever bought cable. So it's just like there is a end date on that industry, and there's no getting around that.
Final question, Mark. Just big picture: how strong, how healthy, how resilient does ad spending look like right now into year end? What are you seeing in your business?
It's very healthy. Obviously, we're publicly traded, so I can't give you too much information, but I'll say we're not disappointed.
Not disappointed. We'll take it. That's a good way to go into the new year. Mark, thanks as always for your time. Appreciate it.
Thank you.
That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet.